Nike stock jumped more than 15% on the day after the company announced their earnings results. So I know many of you are looking at this company now with the momentum behind it, the stock price soaring, and asking yourself if you should buy Nike stock or if you should sell Nike stock now and take profits. Well, before you make any of those decisions, here are the things you need to know from Nike's latest quarterly financial results so it can help inform your decision and make you more informed when you're deciding between buying or selling Nike stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Nike told investors that the early feedback from their change in product pipeline from their wholesale partners at their engagement meetings so far has been positive. And the order book is improving sequentially with the holiday season orders being up. And that's great news for Nike stock investors. Remember a couple of months ago, well, I shouldn't say a couple of months, it was more like 8 months ago when Elliott Hill took over as the CEO of Nike. One of the strategies he implemented was to have a more broader portfolio of products for sale and lean a little bit less on those very popular products. So reducing the amount of inventory available, the styles and colors and things of that nature of the very popular products like Jordans and Air Force Ones and Dunks, and offer a broader portfolio, a more diverse portfolio of products. And the early feedback from the wholesale partners was positive, and that's good to hear because that strategy came with the risk that wholesalers turned down those new products and told Nike instead, hey, send us more of that stuff that works, right? Jordans always sell very well. Send us more Jordan inventory, retros, etc., right? Send us more Air Force Ones, send us more Dunks. Those work well. And Nike said, sure, we'll send you some of those things, but we want to reduce our reliance on those products. We've already saturated those sales. Let's try and broaden the product portfolio. Let's try and get our customers interested. Let's try and introduce more newness to our portfolio. And it's a good sign that it's working well in the early stages. So another thing Nike stock investors need to know is that sales are down in every geography. Nike is hopeful that they will recover, but in China in particular, Nike saying that it'll take longer to recover due to the unique characteristics of the marketplace. And the Chinese economy is not growing as quickly as investors would have expected it to grow at this stage of their development. The tariffs that the United States placed on the Chinese economy is causing a lot of disruption in the economy. Exports are still rising, but exports are not going to the United States, which is China's most lucrative export market. And so the businesses, the consumers in and around China are being a little more cautious with how they spend their money because they are a little concerned about how their economy will react to the tariffs that were implemented by the United States, right? It's still very early days, only a few months into these tariffs that were implemented. We have yet to see all the ripple effects from those tariffs. So the Chinese economy, consumers in China, understandably a little more cautious and also a little more nationalistic, looking more towards Chinese brands and less towards American brands because they have now a more negative opinion of American companies. And this isn't with Nike exclusively. I've seen similar pullbacks from other American companies, including Starbucks is doing poorly in China. Tesla sales are also down in China. Tesla's year-over-year sales in China are down, even though the new energy vehicle market in China is up over 25% year over year. So a lot of American brands are not performing well in China in 2025. One of the reasons why the stock price jumped following the earnings release is because the management team said that they expect things to get better. They expect headwinds to revenue and gross profit margin to begin to moderate from here. So in 2025, sales were down over 10%. For the fourth quarter specifically, revenue was down 12%. And so it's great to hear management saying that from this point forward, they expect headwinds into revenue and gross margin to moderate. And what that means is if sales were down 12% year over year in the fourth quarter, that means for the next quarter and the second quarter and the third and the fourth quarter for fiscal year 2026, Nike expects sales to still decline, but not by as much. So instead of being down 12% year over year, maybe they're only down 10% or 8% year over year. And so they see a steady improvement throughout the next fiscal year, with most of the improvement coming in the back half of the next fiscal year and the first half of the next fiscal year still providing significant headwinds to the company as they adjust not only to the strategic headwinds that were self-inflicted wounds by Nike, but also now the macroeconomic headwinds because Nike manufactures almost all of their products outside of the United States. So they now face significantly higher tariffs from before, right? So they were already facing these headwinds. And now on top of that, they have to pay these tariffs that are much higher than they were just, 8 months ago. As I highlighted, fourth quarter revenues were down 12%. Nike direct revenue was down 14%. Nike digital surprisingly down 26% year over year. Nike stores were actually up 2%. Wholesale revenue was down 9%. Gross margins were down 440 basis points to 40.3, and higher discounts at factory stores and supply chain deleverage and channel mix were among the headwinds that were causing these huge declines. So I was a little surprised to see the stock price reaction following the earnings release because most of what I saw from Nike's management team in the conference call was evidence of continued difficulty. I did see some positives, like I mentioned above, like the fact that the management team saying that they expect these headwinds to moderate from here. So basically saying that the worst is behind it and they expect things to improve from here on forward. But still, these are big uh, challenges to go through, and the execution on the strategy turnaround remains a big question mark. So this is something if you're thinking about Nike and you're thinking that, oh, it's clear sales ahead and everything is fine now. We can go ahead and comfortably invest in this company, a storied brand, a very great relationship, strong brand recognition, great consumer loyalty. All of that is true, but there still remains significant challenges ahead. So cautious I would be with Nike going forward. I would wait to see how they implement this strategy. I would want to see more evidence of the turnaround rather than just taking management's word here and being confident that they will indeed deliver these positive results they're forecasting. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.